Chapter 4 is focused on accounting for governmental operating activities. Mainly, we're going to cover the framework that we covered in earlier chapters that I provided a specific link for, kind of explaining how it worked. It was that matrix that had the government-wide financial statements and the fund financial statements, along with the various types presented on the horizontal axis. And we're also going to talk about some financial statements and then some illustrative transactions that I think will help you in your Smithville application. The first thing we're going to talk about are the two sets of financial statements that governments must prepare and the corresponding two ways to keep the books. Again, this will go back to the whole modified accrual versus accrual basis and the two focus, the economic resources, the current economic resources focus. And we'll cover the framework that we talked about in Chapter 2. Then we'll cover three types of funds that we'll be reporting on here. As well as we'll cover some of the financial statements for the City of Denver. For the governmental funds, we'll go over the balance sheet along with statement of revenues, expenditures, and changes in fund balance. And for the government-wide financial statements, we'll go over the statement of net assets, otherwise a balance sheet, and the statement of activities or an income statement as you know it in the for-profit side. The two sets of financial statements governments must prepare are fund financial statements and government-wide financial statements. The fund financial statements are the ones that are traditionally used in governmental fund accounting. They use the modified basis of accounting, which again has a short-term measurement focus. It's almost like a cash basis reporting method. And this helps users to assess fiscal accountability, how resources were raised or used, and this, is an important part of these financial statements. The other type of financial statements that governmental entities have to report on are government-wide financial statements. These are relatively more recent. They were introduced in 1999 with GASB Statement Number 34. They use an accrual basis of accounting similar to for-profit firms. They have a measurement focus that is medium to long term, and they are designed to help users assess the operational accountability, that is, whether government services were efficiently and effectively provided. Given these two sets of financial statements, there's two different methods that governments use to keep the books. There's the dual track approach, which is going to be what you use in your Smithville application, where when an event occurs, you're making, if it applies, a government-wide entry as well as a fund entry for the same transaction, and they're entered, as the transaction occurs. And this is more transparent or accountable because if a citizen or regulator of some type wanted to see the financial statements on either type, either the government-wide or the fund statements, at any time, they would be ready, in a sense. They would have already been posted. The reclassification approach, because the government-wide financial statements is a relatively new thing, in practice a lot of governments use this, and that is they release only their fund financial information throughout the year, and then they just make some entries at the end of the year to reclassify it to the government-wide standards that are needed for the year-end audit. This, of course, is less transparent or accountable because if someone stops them in the middle of the year and says, hey, let me see your 6-month government-wide statements, of course, the government would not have those ready and would likely, because they don't do it routinely, would not likely have those available in relatively short order. This is similar to the approach that our foundation uses, in that we report on a cash basis throughout the year for all of the funds that we maintain for UAB. and only at year end do we convert our our statements to an accrual basis and do things like record depreciation expense and adjust market value of our investments and things like that, because our users of our most of our users are departments around campus that only have cash and they only spend cash and they just want to know how much they have left, how much they started with, how much they. So this sounds relatively familiar to me, this reclassification approach. However, our new software allows us to prepare accrual-based financial statements on a more on an easier basis, quicker turnaround on those. And again, here is the framework that we covered in Chapter 2. And you'll see, of course, on the top are your government-wide financial statements, and on the bottom are your fund financial statements. And also in that chapter, we covered 3 types of funds called general, special revenue, and permanent fund. And those are all 3 classified as governmental activities. And so the dual track, again, means that as you go, as each transaction is recorded, it is recorded in both places as you go, if applicable. Now, there are some cases where a transaction will only affect the government-wide financial statements, or conversely will only affect the fund financial statements and won't be recorded in the other. You'll run across a few of those in the Smithville application, and I'm pretty sure your instructions, they don't make you, they help you out on that, in that they let you know where, which transactions you don't have to worry about posting to the government-wide statements. And we'll cover some of those transactions later on. If you'll remember from Chapter 2, again, the main fund is called the general fund. All governments have a general fund. It's the fund that's used to account for all transactions of government that aren't accounted for in another fund. The general fund, in other words, it's used to account for ordinary operations of a government that are financed from taxes and other general revenues like fines, things like that. Second type another type covered in Chapter 2 is special revenue fund. This fund is used to account for revenues from specific taxes or other earmarked revenue sources that by law are designated to finance particular functions or activities of government. These will continue until a legislature either revises them or discontinues them. Of course, an example of this is gas tax revenue. Goes into a special fund that is supposed to finance road improvements, things like that. A few articles in the Wall Street Journal have talked about the fact that a lot of states, though, in the past few years have raided these transportation funds to help balance their budgets. While the bridges and roads and stuff go unrepaired. So this is something that is that requires legislative action to override. The legislature is the one that passes the budget that taps these sources, these funds. But in any event, that is an example of a special revenue fund. A permanent fund is a governmental type fund. This is used to account for public purpose trusts for which the earnings are expendable for a specified purpose, but the principal amount is not. In other words, the principal amount is like an endowment. If you have an amount for which the principal amount and the earnings from it are expendable, that's accounted for as a special revenue fund. The state of Alaska has a permanent fund that is set up to for citizens that meet the qualifications receive payments, distributions from a permanent fund that is made up for state oil revenues. So that's an example of that. Note here, this is a balance sheet for the city of Denver. that displays their governmental funds. Note that there's an asset section, a liability section, and a fund balances section. But pay attention to the fact that there are only current assets and only current liabilities. And again, this is because governmental funds have a current economic resources measurement focus. Then the fund balances are broken down into a reserve fund balance and an unreserved fund balance. You notice that there's 4 columns aside from the total column, which makes 5. There's a general fund, which all governments have, a human services fund, which is a special revenue fund for the city of Denver, a bond projects fund, which is a debt service fund, which we will cover later on, and they have taken the rest of their funds and lumped them into other governmental funds, which you also saw this on the framework that we covered in Chapter 2 and on an earlier slide. Next, there's the statement of revenues, expenditures, and changes in fund balance. For these governmental funds, you'll notice they have the same 4 columns. There's the revenue section, the expenditure section, the other financing sources, other financing uses are kept in the same area as kind of an other area. Notice all the tax revenue, all the general tax revenue are all going to the general fund. There's only a few categories of revenue that are hitting the special revenues funds and the bond projects fund. The other governmental funds, however, have several types of revenue hitting those. The expenditures, note that again, we'll talk about the debt service and the special revenue funds later, the debt service fund later. But notice too, there are only specified expenditures. As the special revenue fund that we talked about earlier for gas taxes, you would only see really an expenditures in the road maintenance line item, and that would be it. All these other ones would be blank. Whereas the general fund has a number on almost every single line. Just like revenues and expenses affect the retained earnings of a for-profit entity, these revenues and expenditures affect the fund balances of a governmental entity. The first statement we'll go over from the government-wide financial statements is the statement of net assets. You notice from the previous financial statements that we looked at have been classified as either governmental activities or business type activities. The governmental activities covers all the governmental funds as well as the internal service funds. And you'll notice the main difference here is that we have non-current assets or capital assets and non-current liabilities that are included here that were not included in the previous, in the fund financial statements, again, because the measurement focus is different. With the current measurement focus being what the fund financial statements use. Lastly, you have the program revenues are listed in separate columns. Flip side. Instead of business type and these columns, they're separate sections that are presented in rows, and with the net expense, revenue, and change in net assets section being over to the far right. So these are your government-wide financial statements. Again, especially this one is going to look a lot different than what you're accustomed to in the for-profit sector. There are some transactions, some illustrations of transactions for these types of fund financial statements that are presented later in Module 4.